The news is full of stories about supply bottlenecks, about how firms can't get goods from production line to store shelves. Reuters followed one Chinese export to see what that really means. These game controllers start life in a factory in China's Guangdong province. From there they go onto ships headed for the US. Final destination, big-name stores like Best Buy and Walmart. Or at least that's the theory. The reality is now much more complex, with supply chains thrown into chaos in the wake of the global health crisis. Fraser Townley is boss of manufacturer T2M.
It's impossible to get containers, and once you've got the containers, it's impossible to get the drivers, and once you've got the drivers, it's impossible to get things scheduled and timed and what have you. So logistics has been something we've never experienced before.
Like countless Western firms, T2M doesn't have its own factory. Production is done by a Chinese firm. But now it's hard to get goods into the US, even if you can get them out of China. Labour shortages mean a record number of container ships are stacked up, waiting to unload, outside US ports like Long Beach in California. The problems have driven a surge in costs.
This time last year, I remember being extremely upset that I was being charged somewhere between $3,500 for a 40-foot container to get here. Now, if they ask you for $20,000, you ask where do I sign, where do I pay? It's crazy.
The problems are repeated worldwide, and firms have been forced to innovate. T2M used to ship goods direct to its warehouse near Boston, Massachusetts. Now they have to go overland from California, a more expensive route. All these problems add to costs and are a big factor behind soaring consumer prices worldwide. Now the White House has a task force looking at ways to ease the logjam. Like firms everywhere, T2M just hopes its products get to the shelves in time for festive season shoppers.
A leading Paris taxi company has suspended the use of all Tesla Model 3 cars. That after a fatal accident with one of the electric vehicles over the weekend. An executive from the firm G7 said the 37 Model 3s in its fleet would stay off the road until the end of a police investigation into the case. G7 said the driver was off duty and taking his family to a restaurant when the accident happened on Saturday evening. One person was killed and 20 injured. The executive said the car accelerated when the driver tried to brake. However, the firm said that an initial inquiry by Tesla had ruled out a technical fault. The US automaker did not immediately respond to a Reuters request for comment.
Soaring fuel prices are one factor behind a surge in UK inflation. New numbers out Wednesday showed price rises jumping to 5.1% in November. That is the highest in more than 10 years, and above all forecasts in a Reuters poll of economists. Higher energy prices have been driving inflation globally, as have supply bottlenecks resulting from the global health crisis. In Britain, post-Brexit trade and migration barriers have added to the problem. That saw price pressures rise across all kinds of goods, not just fuel. Clothing and footwear saw a notable jump. It all ramps up pressure on the Bank of England, which has to say Thursday whether it's raising rates. The central bank has said that an increase will be necessary to cool off price rises. But most economists now expect it to hold fire this week. They think policymakers will want more time to assess the impact of resurgent health worries. However, the International Monetary Fund has predicted that UK inflation will hit 5.5% in the second quarter next year. This week it warned the Bank of England not to succumb to inaction bias.
Signs of a heated economy amid the fast-spreading Omicron variant sent Wall Street south Tuesday, extending Monday's declines. The largest gain in prices at the wholesale level in 11 years reinforced investor expectations that the Federal Reserve will announce on Wednesday a faster wind-down of its massive asset purchases. O'Neill Global Advisors Senior Portfolio Manager Randy Watts says the Fed will be forced to take action after the recent spike in producer and consumer prices.
People are worried the Fed is going to be too aggressive in their tightening cycle. That tightening cycle is clearly starting. One of the things that's driven the stock market is liquidity, and the Fed is going to start draining some of that excess liquidity out of the market.
Declines in tech stocks led by Microsoft weighed on all three indexes. The Dow retreated nearly 1/3%. The S&P 500 lost 0.75%, while the Nasdaq dropped more than 1%. Apple was the second biggest decliner on the S&P and Nasdaq. The iPhone maker said it'll require customers and staff to wear masks at its U.S. retail stores. Uber shares shot higher. CEO Zara Khosrowshahi said the ride-sharing company was looking to sell stakes in non-strategic investments, including its shares in Didi Global, the Chinese ride-hailing company that said last week it would delist from the New York Stock Exchange. Shares of Beyond Meat jumped 9%. Piper Sandler upgraded its shares and hiked its price target, saying that McDonald's may launch its McPlant burger in about 3 months. That burger relies on the vegan meat supplied by Beyond Meat. Pfizer rose. The drug maker said its antiviral COVID-19 pill showed near 90% efficacy in preventing hospitalizations and deaths in high-risk patients. What's more, recent lab data suggests the drug retains its effectiveness against the Omicron variant.
Sales at the world's top 2 fashion retailers are back at pre-health crisis levels or better. That's according to both Zara owner Inditex and rival H&M Wednesday. Spain's Inditex said sales were up 10% on 2019 levels from August to October. It reported sales of $8.2 billion and a net profit of more than $1.3 billion for the 3-month period. Online sales excelled in the first 9 months, up 124% on the same quarter in 2019. It comes despite companies struggling to source products and raw materials due to global supply chain issues. But Inditex produces more than half of its goods near its base in Spain, so it can deliver to consumers faster than rivals. Sweden's H&M said its net sales reached $6.22 billion in the September to November quarter, but the group warned its business was still being hit by the health crisis due to temporary closures of more than 100 stores, mostly in Austria and Slovakia. The company is due to publish its full fourth quarter earnings report in late January.